Hello, today we will discuss preparing for tax season and learning how to better prepare for taxes for 2021 and beyond. During today's conversation, we'll talk through the importance of submitting valid tax returns and starting off by just how is your business taxed and where do you start? What are the things that a child care provider should be mindful of when preparing their taxes? And how can child care programs assess their past taxes and what resources and tools are available to do so? And then lastly, we'll talk through how you can prepare for next tax season and receive help having this information on these best practices. So we want to first open up this session by prefacing this information with the importance for you to evaluate your own tax situation along with your qualified tax professional. The guidance that you'll hear throughout today's presentation has been directed from research via researching actual child care provider tax returns, in addition to the guidance that the IRS provides when performing your tax returns and completing your Schedule C, and best practices in general with tax returns. Uh, we are not providing tax advice on or advising on any individual specific tax situations. So if there is something that you have specifically, you should take that up with your tax preparer or research your concerns using information available by the IRS. So to start off, taxes are often confusing and associated with overwhelming forms, anxiety about future audits, and fears of a large tax bill. However, tax season can also be an opportunity for small business owners to save money and head off the risk of future issues. In today's conversation, we'll discuss the importance of taking the time to prepare for your taxes, how to analyze your past tax return for opportunities to do better this year, and also we'll discuss a free resource that shares information to help you prepare for your annual tax filing. Today's conversation will be most useful to home-based family childcare providers and small center providers who typically file as a sole proprietorship under Schedule C. That being the case, there will still be useful information for childcare providers of all sizes. So how does this work? While it's our responsibility to pay our fair share in taxes, proper tax preparation can be a vehicle for recapturing your hard-earned profit and keeping more money in your pockets, all while reducing costly liabilities for your childcare business. Self-employed small business owners are subject to a 15.3% self-employment tax of their net earnings or profit remaining after all your expenses have been subtracted from all revenue. In addition to the self-employment tax, you are still subject to your general income tax rate on the profit you've made. When you claim all of your expenses correctly, you are creating deductions, which essentially reduce your profit. And your profit is the number that you get when you take your revenue or all the money that you have coming in and subtract your expenses or the money that's going out. And if you look here at the graphic, just to simplify the process, what's considered your taxable income is your revenue minus your business expenses. And whatever remains is that taxable income that you are subject to the 15.3% self-employment tax. And then that net income transfers over to your personal tax returns, in which you are then taxed at your ordinary tax rate. However, use of deductions can lower this taxable income amount so that you do not have to pay more than you should in taxes. So let's look at an example. Let's say you've brought in $40,000 in revenue, but you claim no deductions. You will be subject to self-employment tax on the entire $40,000 and also taxed at your general income tax rate on the whole $40,000. On the flip side, let's say you've brought in $40,000 in revenue and you've claimed $10,000 in deductions. That would reduce your profit to $30,000, and you will only be taxed on that $30,000 rather than the entire $40,000. So as you see here, your tax liability is higher if you are not claiming deductions or as many deductions as you should, and your tax liability will be lower with the use of deductions. So using deductions will yield in a lower tax liability for you. So what about child care business taxes specifically? The Luminary Evaluation Group analyzed 60 child care business federal tax returns from 2019. And while there were a number of observations from that analysis, here are some of the key findings. 83% of child care providers that operate out of their home did not claim the business use of their home at all. So this applies to home-based child care providers who conduct business out of their home. The IRS allows for this deduction on the Schedule C, which is line 30, the business use of home. You can take deductions associated with those costs. However, through that analysis, it was found that 83% of home-based child care providers did not claim that at all. The next finding, in some cases, providers didn't claim any expenses on their tax returns at all. So this is never something that you would want to happen with any business, and especially in a childcare business where every dollar is so important to put back into your program to run these essential services. And there's undoubtedly a number of expenses that a childcare provider has in order to operate. So there should never be an instance where a provider is unable to find or claim an expense that's associated with their operational childcare business. So on the Schedule C, the IRS has a number of categories, expense categories, under which deductions can fall. So we do encourage you to take a look at each of those expense categories to see if you've had any expenses at all that qualify. And if so, you want to be sure to claim them so that you can lower your tax liability and the money that you have to pay towards those taxes. The next finding, many providers were claiming certain business expenses, which can drastically increase their chances of an expensive and time-consuming audit by the IRS. So while we do advocate for providers to claim valid expenses, the key word is valid, and not all expenses will be valid or associated with running your childcare business. And those could trigger those automatic red flags by the IRS, which could prompt a detailed audit. And a rule of thumb, what the IRS considers a valid deduction is one that is ordinary and necessary. So that's one that's required for you to operate your business and one that's appropriate based on your business type. And they are evaluating those when they do review your tax return. And the last key finding were that several common deductions were often miscategorized or improperly calculated that when present on your taxes can again raise an automatic audit alert. So while some deductions were valid that childcare providers were taking, they were just unfortunately putting them on the wrong expense line or possibly not calculating them according to the rules and the guidance that the IRS has issued for that expense. One of those, and we can just talk about that right now, would be children's meals. We found that, or we've concluded that many childcare providers were using the deductible meals expense, which is included on the Schedule C, for the children's meals. However, that is not the intention that the IRS has for that particular line item. So if they see such a high number or something that causes them to wonder, why does a childcare program have such a high number in these deductible meals, which are supposed to be business meals when you're out traveling or at a conference of sorts, that could prompt an audit. And it's not that the provider was intentionally doing anything to defraud the system. They did have a large number of children's meals expenses. However, because they put them in the wrong category, that could prompt an audit alert. And we'll go into that a little bit further. So, in terms of some of the common missed deductions, we talked about certainly that business use of home, but let's go into that in a bit more detail and also some of the other common deductions that are associated with operating a childcare business that providers overlooked during that study. So the business use of home. Home-based childcare providers can claim the business use of their home on their taxes. And to determine the business use of your home, you will use what is called the time-space calculation to find the percentage of time and space that your home is used for business purposes. You would then apply that percentage to expenses that are associated with your home, such as the rent, utilities, or a mortgage. To find out more information about how to perform the time-space calculation, please visit childcare.texas.gov, and under Business Resources, you will see the free resource on calculating your time space. So this is an essential and a very important deduction that home-based childcare providers should be sure to take. It will aid you in capturing some of those routine expenses that you have that's associated with your business that you just may not realize or be capturing otherwise. And again, this will help reduce your tax liability in the long run. Insurance costs. So there is an expense category for insurance that's included on the Schedule C, and business related insurance costs, such as liability insurance, which most childcare providers are required to have or that you carry. It can be claimed on your taxes. So be sure that you are thinking about those insurance costs that you have. However, this particular insurance line cannot include your personal or health insurance. So just be mindful of that. But it can cover your liability insurance and other insurance that is related to your business that you carry. Mortgage interest was also a commonly missed deduction for childcare programs. So, for those programs that are not home based, mortgage interest for a business property that you own can be claimed as a deduction. For home-based providers, this would already be captured in the business use of your home calculation. So you would not need to have a separate line or expense line for your mortgage interest as a home provider because that would already be captured when you do that time space. However, for those center-based providers, be sure to consider if you are paying mortgage interest to include that expense on your taxes. And believe it or not, supplies was a commonly overlooked deduction. You would think that overall 100%, right, of childcare providers would take this particular deduction because a childcare program needs a variety of supplies and equipment to run. So these supplies can include things like classroom supplies, learning materials, toys, diapers, wipes, cleaning supplies, and more. So just consider what expenses you've had, hold on to your receipts as you make purchases, and those expenses can be included as valid business deductions for your childcare program. Another commonly overlooked business deduction in our study were wages. So the total salaries and wages for the year for W-2 employees and yourself, if you pay yourself through payroll, can be deducted on your taxes. And for more information on paying yourself, there is a guide at the childcare.texas.gov website that's entitled Paying Yourself, a Guide for Sole Proprietors. However, we do want to note that 1099 employees cannot be claimed on this line, only W-2 employee wages. And you can learn more on how to distinguish which category your employees fall into using this resource. When is someone a contractor or an employee, which is also available at childcare.texas.gov. So the key thing about the wages line item here is A, to be sure you are using it if you are paying W-2 employees, but then B, being sure that you're only including your W-2 employees on this line and that 1099 contractors are not included on this wages line. So in addition to those expenses that should be claimed, there are others that you want to be on the lookout for, improper, miscategorized deductions that are not applicable to your childcare business. Small businesses are now being targeted for auditing by the IRS now more than ever. Many audit triggers are automated formulas that flags certain line items or amounts for certain types of businesses, which can then lead to everything being reviewed with a fine-tooth comb by the IRS. This is time consuming, and it often comes with potential costs associated with being represented by someone like a CPA. So these are some of the frequently misused deductions that childcare providers should be mindful of. So first, there's the cost of goods sold. The use of this line in particular could trigger an audit alert, since it would be extremely uncommon, if ever used, in childcare. Generally, this cost of goods sold line is referring to inventory that a business has on hand that they were not able to sell or get rid of. So it really applies mostly to businesses that are like manufacturers or retailers of goods or products for sale. So that's not associated, ordinary, or necessary for a childcare business at all. And clearly the IRS is aware of that. And if they look at your business type and it doesn't match the categories of expenses being used, that could trigger that automatic audit alert. And then there's also the deductible meals that we touched on a little bit earlier. But based on what we have seen and the amounts and the frequency with the claims underneath this particular expense, we believe providers may be entering costs into this line when they are referring to meals that they're serving the children. And that is not the IRS's intention for this particular deductible meals expense line. So putting a high dollar amount in this line for a childcare program can appear like you're trying to deduct either all of your personal meals as business expenses or something that's just not applicable. So be sure to remember that the deductible meals line item is for business meals only. And those are meals that's occurring like during business meetings or outings or events like professional development, travel, or conferences, not the meals that are being served to children. Those can be claimed elsewhere on your taxes, just not in this category. There's also the car and truck expenses line item. So car and truck expenses are a great deduction for childcare programs as long as you are only claiming the amount of your vehicle and associated expenses that are used for your business. So the IRS does have clear guidance in terms of the burden of recording that's needed and necessary to justify the amount that you're deducting for this line item. Also, when it comes to the car and truck expenses, providers, they can deduct the actual expenses of operating their car for business. So looking at things like the cost of gas, oil, repairs, insurance, license plates, tolls, parking, and etc. By calculating the percentage of time that the vehicle is used for business. And then you would apply that percentage to the actual costs to get the valid business amount for your car and truck expenses. Alternatively, providers can perform the standard mileage rate calculation that's available by the IRS. The bottom line is that you just must be able to document how you've come to the total entered. So we just wanted to be sure to highlight that for childcare providers, as this was a frequent expense, and the variation in the amounts and how they were being applied. Just want to be sure that you're following the guidance given by the IRS for this expense. So what's a great way to start prepping for this year's taxes? Well, you can start by looking backward. Many providers may not realize the missed opportunities that they've had for deductions to reduce their costs and the audit risks that they may have taken. To help you assess last year's taxes, we suggest using the Confidence and Quality Tax Prep rubric, which was developed by the Luminary Evaluation Group. This rubric is based on the review of the 60 tax returns filed by actual child care providers. So, how can you use this rubric to assess your last year's taxes? Well, first you want to retrieve your tax return from last year and focus on the Schedule C. Well, the rubric is focused on the Schedule C, which is the profit and loss from a business in your 1040 return, since that's the most commonly used by child care providers. Next, you'll go item by item using the rubric. The rubric is laid out to mimic the lines that's on the Schedule C, but it gives you guidance based on the research from that tax analysis that was performed on whether or not certain expenses are applicable to child care, whether or not this is an expense you may want to use caution or consult more with your tax professional about, or if this is an expense that you should be sure that you've claimed. So it can be used in all of those ways. So you'll go through the rubric and simply note where you can do better and share it with your tax preparer. It's important to know that you can revise your taxes for up to 3 years after they are submitted. So when you are performing this review, if you find opportunities for deductions or ways to head off a potential audit when you review those last year's taxes, you should share those concerns with your preparer or use your online software to make those appropriate changes. They're valid and you can do them within 3 years. So we do encourage you to take a look at those past taxes for those opportunities to save. And looking forward to preparing for next year. Now that you have an idea of how you can more effectively report your revenue and costs for your taxes, you need to collect the numbers for this year and find the best preparer that you can. Whether you choose to prepare your taxes yourself or use a qualified professional, be sure to refer to the Confidence and Quality Tax Prep rubric to make sure you're maximizing your deductions and minimizing your risks. We also recommend that you use the Tax Prep Guide from Homegrown Childcare, and that's the 2021 Taxes Workbook. It's designed specifically for childcare providers and specifically for family childcare providers. However, it will work with almost any provider who reports their business taxes on a Schedule C. So it's worth checking out. The guide includes information for handling relief funding as well, including the PPP and how that will play out during tax time. So that workbook is available at homegrown-tax-resources-for-HBCC. And as you assess your tax situation and prepare for the next season, please know that the Texas Child Care Business Coaching Team is here to help you with free one-on-one coaching. During your call, our experts will walk you through an assessment of your tax situation and answer any questions that you have to make sure that you're ready for the 2021 tax season. So please visit childcare.texas.gov to register for your free coaching call and to find more useful resources to support your childcare business. This help and support is available in both English and Spanish. And there's other resources outside of Texas, but helpful business resources specifically for childcare providers, also available at that website. And in the event you just only have a quick question to send over, you can feel free to send us an email at texas@ecebizcoach.org, and we will be happy to answer any question that you have. So please don't hesitate to reach out. Thank you.